Monday. What's up, everybody? Monday morning. Welcome to today's edition, Daily Market Commentary. Hope you're having a phenomenal day. I'm your host, Chuck Fulkerson. We're going to do what we do each and every Monday, Wednesday, Friday, looking at our four major markets, identifying potential breakouts and reversals from an educational perspective. Hopefully, some of you joined us last night in our live trade room for our free preview week. If you missed it, go to tradersarmy.com, sign up for a free membership, and you can join us. We've got two live trade rooms going on today. A futures room this morning right around the market open with Herman Casas, and then an options room with Corey Lane, so don't want to miss that. All right, let's go ahead and dive into today's market action, what we have so far. So if you go to the ES, we're down about 8 points, and you'll see some lines on here from some of the trades that we looked at last night. And the S&P, we're down about 8 points, but the thing we pointed out last night is the fact that we put in a follow-through day on Thursday of last week in the NASDAQ. Not quite a pure follow-through day in the S&P because our volume wasn't any higher. But looking at a weekly chart, we closed on the high of the week, and that's a fairly bullish signal. Now, we did have a similar bullish signal a couple of weeks ago, but that was unable to really kind of follow through. But it didn't have the same volume associated with it as well. And so when I look at the S&P and I look at this on a daily time period, it does look like we formed a little bit of a short-term bottom at this point, right through here. And so it would make sense to kind of add to positions and look to get long again in a lot of our trades. And so with that being said, there's a breakout trade above 44.72. We did have a demand area down here on a 15-minute chart that I wasn't in love with, and I'm kind of glad that I took that off last night because this was the level that we had looked at last night and decided to take it off the chart. And you can see why. Price came back into that area, and then it just kind of hovered. We do have a 15-minute level right in this range here that I think is still pretty valid at 44.31, provided that we don't base too much in front of the level, right? Basing in front of the level is the kiss of death. But ultimately, the best trade, I think, is going to be a breakout above that 44.72 with enough basing inside that area. Next one would be the NASDAQ. So looking at the NASDAQ, we've got a really nice hourly wick over wick here. Price didn't approach it last night. I was kind of hoping that we would get back into that area. It's a good whole round number level at 15,000 on the NASDAQ. Price would have to drop back into that area. Now we're trading at 15,110. We're already down 23 points. So by the time we would make it down to this level, we would be down 135 points on the day. And so I think that would freak some people out, being down 135 points, which is actually going to be a good thing for people that are willing to buy at quality areas of demand. So keep an eye on that one for today. Looking over at crude oil, it's continuing to march higher. We definitely put in a Globex high right here. We could get a breakout trade above that Globex high, so look for that as a very distinct possibility. The next quality area of demand is down here at 81. I didn't really like any of these levels coming up to this region. And typically what happens is when you've got something that's in a strong bullish move like this, when you get a stall, it's a good opportunity to get long on a breakout. And so we're getting a small time frame stall right through here. And that small time frame stall could be an opportunity to get in as this kind of continues to rally higher. If I look at this on the daily chart, it's just a very, very strong move up. And while I believe that we're probably overdue for a bit of a pullback, matter of fact, if I pull this up on a weekly chart and throw my Bollingers on here, you'll see that we're overextended even on the weekly Bollinger Bands. You would anticipate that typically when you're overextended on a weekly Bollinger Band, you get a pullback, some sort of a reversion to the mean, but we're not there yet. And if we go back way farther in time, you can see this weekly level here. Let me remove those Bollingers for a minute. This weekly level over here on the left, and that oftentimes that area that I'm looking at right here will become a magnet for price. If we look at this area right here as a price magnet where I think we could easily trade to, I thought we would make it there back here before the OPEC intervention. So keep an eye on that level as kind of the magnet, the target for where we're eventually going to go. I don't think it's going to get there immediately. I do believe that we'll have some sort of a pullback before getting there, and a pullback into 75 or 76 would actually be perfect because in that case, old resistance would act as new support. But for the small time frame, look for the breakout above this region here. I don't really love any of these areas of demand. Even on the 15-minute chart, none of the demand areas are super ideal. This one wound up working out pretty well last night. After we wrapped out the live trade room that did create a demand area that price retested. I couldn't use it again anyway if I wanted to. There is a little, noisy cricket level if you want to be super aggressive. This 82.66 by 82.60, tiny little wick over wick area right here that also could be used. All right, and then we have gold. Now, gold, we talked about a potential breakdown below this 1764. This was the area that we were looking at last night on the hourly chart. We did get a little bit of a poke below there, and now we've kind of done a whole lot of nothing since that, since we broke below there. I still think that level's valid, but now it would be a bit of a retest up to here or a retest on this line, right? Oftentimes, old support becomes new resistance. So if we get lower than this candle's low, then you can certainly get in on a candle-to-candle reversal trade. I think that also could make a pretty good play. For our stock of the day today, I want to take a look at our FANG stocks, and I've been doing this pretty recently. This has been something that I've been looking at and some levels that we've been identifying. Starting first with Apple, we talked about the fact that Apple could reverse back at one of these prior regions. I really like this level down here as the better of the two. Now, we did bounce off that and got a little bit of a move, but it's kind of stalling a bit. And so the one that I'm really paying attention to is this one down here. Now, earnings aren't coming up until the 28th, so those will be coming up soon. If you look at Facebook, Facebook is really taking it on the proverbial chin. As they're, ever since the Facebook whistleblower scandal, it's kind of gotten a bit worse. But earnings coming up on that one as well on the 25th after market time. So when I look at Facebook, the levels that I, am paying most attention to, certainly there's a really nice gap fill area right here. And then there's quality demand. My best area of demand comes into play right about here. What does that mean? Well, it means that there's room for price to fall more than there's room for price to rise, and we're closer to the overhead supply than we are to demand. So let's look for price to continue to fall from this region. Microsoft has been the light in the darkness, if you will, as it's rallied back up right near its all-time highs. Not quite there yet, but if we get a little bit of a rest on a pullback, Microsoft does give us a decent potential entry right through here. And I know not everybody trades these individual names. Sometimes we're sticking right to the indices, but don't forgo these names, right? These could be good setups. Our setup in Amazon worked out extremely well as price came back down into this area of demand, which we spoke about earlier, I think it was a couple of weeks ago, and has now rallied up nicely off of that zone. I think that you've got a price target on that if you took the long at about 34.60, and we're trending back up into that region. And then Google. The Googler, you're looking for price to get above this 3,000. We would like to get some basing in there, but with earnings coming up, it is something to be suspect of. So those are the kind of the major stocks of the day to keep an eye on. Those are the ones that I spend most of my time looking at. Tesla also needs to be a regular on this list, and this is one that we've looked at on a number of occasions. And the last time that we looked at it we talked about a breakout above here. And so if you're still in that breakout trade, you're getting a really nice run. Interestingly enough, we've got earnings coming up on the 20th. So earnings are coming up in just a few days, and we're seeing volatility really sell off in the last few days, which I find pretty interesting. Volatility really falling off hard before the earnings report. But a good run on this. So if you took this long, you're probably up about $80 a share. I would look to maybe take a little bit of profits off the table before earnings are released. You never know what can happen on earnings. Although this one really has been pretty stable on earnings for the last few earnings reports. We'll see what the consensus looks like on this once the earnings happen. So with that being said, that's all I have for today. Make sure you join us later today in our live trade rooms. If you have any questions, please send us an email, support@tradersarmy.com. I will talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.